And good afternoon. Welcome into a Tuesday, December 15th edition of Market Talk. I'm your host, Jesse Allen. Great to have you here with us on the program. Merry Christmas, Happy Holidays to you and yours. MarketTalkAg.com. That is where you can find us, our home on the web, MarketTalkAg.com. Facebook, Twitter, Instagram. It's all at Market Talk Ag. And many of our great radio affiliates, including KWMT in Fort Dodge, Iowa, KGLO in Mason City, Iowa, KZEN, KZ100 in Columbus, Nebraska, and KGNC in Amarillo, Texas. Well, taking a look at this market trade today. It was a solid day for soybeans, up once again, closing above some resistance levels. Wheat and corn finished a little higher as well. Here to talk about all of it with us is our good friend Matt Bennett with agmarket.net. Matt, great to have you on. How are you, buddy?
I'm doing good. How are you doing?
I'm doing fantastic, Matt. And it's good to have you on once again. I think it's a good day to have you on to talk about where this market is at right now, because I tell you what, I think a lot of folks were happy. We saw some higher trade yesterday, especially in soybeans. Today, seeing that once again, closing above some key resistance levels. And let's just start overall. Well, no, let's just start with soybeans. I think that's a good place to go here, Matt. 1184 to quarter today on that January contract. We're up almost 15 cents there. Just looking at soybeans overall, what are some of your thoughts after today's close?
Well, we looked, for instance, last week, the day of the report, of course, we were just surging. Then the report happened, and actually we trimmed down to 175 on a carryout, which, was a friendly number, but at the same time, not super friendly because the thoughts were that it was going to be a little bit tighter yet. But we couldn't get back up to that 1182 and a half area there for March soybeans. That was the high the day of the report. Okay. But it was before the report was released. So most of us been watching technically, if beans get back above 1182 and a half, then you've got the chance to maybe open the door to try $12 again. I mean, we failed 3 times now, but can we go back up and test it? And I think the way that it closed today, by all means, it's a really good opportunity that we're going to go back up into that 12 area and test it. Now, the crush numbers were really good today. I think like 181. Bottom line, though, there's a lot of demand. It's not just crush; it's export demand. And yes, we're not getting those morning numbers. We know that, but we also know that the Chinese are boiling through soybean meal like it's going out of style, and they're going to need it from somewhere. I just think they're trying to shake us out right now, waiting to see what's going to happen here in South America. But interestingly, the dollar keeps plummeting, and so it makes our products very competitive on the world market moving forward. Maybe even once those beans become available.
Yeah, and that's all great points you mentioned there. And that meal market, especially, was very strong today. Bean oil was strong once again as well. And, it seemed like maybe when that report came out, we had a little bit of correction with the market, as you kind of alluded to on the soybean side. But now it's almost like the market has digested that. It's looking at that tighter carry out and saying, all right, we're going to push this thing back higher, and maybe usually they say third time's the charm. Maybe fourth time is the charm here, Matt.
Yeah.
We go above 12.
Yeah, I mean, let's be honest about it. If it's a 175 carry right now, and we didn't drop exports or raise exports, thus dropping carry out in December, then that tells me that the trade is going to expect, a drop in carryout due to exports in the month of January. Now, if that's what they're expecting, there's a really good chance you're going to rally into the report, not necessarily after the report's released. I mean, how many times have we seen this play out? And so I've got to think that some of the money that's been taken off the table here in the first couple of weeks of December. I mean, let's face it, they're doing so because they made so much money being long the market, and so they're pulling money off the table. Hey, we had a good year, but then they're looking at this market and saying, I don't know if I want to get out. I want to maybe kind of keep my toe dipped in the water. And I think that's what you're going to see is that this bean market, if you do get above 12, you're looking at a pretty big rally. I think that you could see another, I don't know, at least another dollar on this market if you can get back above that 12 level, because, as well as I do, you're limiting how many people's playing the market, the higher you go. And sometimes whenever you're in that situation, it can get really carried away.
Yeah, and it's something I think we'll be watching, those producers who have been holding on to some bushels of soybeans, trying to maybe, some of that risk that want to play some of that risk there at the market. It'll be interesting to see what we could do here the next couple of days. Another strong day tomorrow, I think, could have a lot of producers really start to think about moving some of those some soybeans that they've been holding on to. Matt, let's check over on the corn market. A pretty quiet day there today. And we did manage to finish slightly above unchanged in the front month futures. We're kind of just holding range bound around 425, but I know a lot of folks are very optimistic with this corn market, maybe even bullish. What are your thoughts on the corn market?
Yeah, I mean, the corn market today kind of reminded me of whenever you go to a high school game and someone's stalling, boring. I wanted to yell at my screen, "This is boring," But it was a very frustrating trade. In that, the wheat market was up early on. Yesterday wheat was down, corn and beans were up, and corn had a nice day, but nothing fantastic. But and then you come in today and the wheat market's up early. And neither one of our markets were doing much. Then finally, beans caught a bid, and then the corn market just floundered around and sputtered around. But looking forward, I mean, I do feel like corn bulls, again, they've been handsomely rewarded. We know that. Some of the money's been taken off the table. We know that as well. And so, I think that if you came in, for instance, tomorrow morning and the export, you get a surprise export announcement, it's probably going to be something that helps the corn market. We know darn good and well, I think on my team anyway, that this 1.7 carryout is bound to be trimmed. I mean, you look at what the shipments have been and you look at what sales have been, corn's running well ahead of pace, to put it mildly. And so, you've got to think that you're probably dealing with something south of 1.6, maybe even closer to 1.5. If that's the case, your stocks use ratio is as such that you really don't have a whole lot of wiggle room. And so, I look towards South America's weather situation. They've been dry, they've trended dry, they've run some major soil moisture deficits. But to me, a couple well-timed rain events on this first crop, and you can have a decent crop. We know that. But hey, what happens if you go into the second crop dry? Because usually the safrinha crop, when you get towards the tail end, they get into a dry season. So, you don't want to be running on fumes going into that second crop. That could have a huge impact, not to mention Argentina is drier, relatively speaking, than what Brazil is. And Argentina certainly is a force, in this world corn export market as well.
Mm-hmm. Well, and I think another thing too, you mentioned the South American crop. That's going to be very, very important. But also, as we go through the next couple of weeks, we start to get into next spring, the acreage battle in the U.S. between corn and beans. I think that's going to play more, 6 months out here into this market. I think that's going to have a big impact on where this market goes in the first part of 2021.
Yeah, I couldn't agree more. The last couple 3 years, it's almost been a hot potato type thing when it comes to acreage. I mean, everyone's been saying, I don't really want the acres, so I'm going to drive my price low enough that nobody wants to plant our product. But I mean, this year this is a different ballgame. I mean, you look over to the wheat complex, and July wheat's 596.5 on the close today. And you've got to think that a lot of producers look at that and say, that's an awfully nice little thing to latch onto. And so I know that a lot of wheat was planted this last fall is because price was pretty decent. I think spring wheat, you could have a fair amount of acres planted, if you could get some sort of a rally. But let's face it, it's going to have to rally with beans at 1065. And so my opinion, with D's corn at 412 and a quarter, you could probably see a little bit of upside in that D's 21 market. I don't know that we're going to get wildly carried away early on, but bottom line, I think you get 420, 425 fairly easily. What's your spring insurance price going to be, though? I think that will be a very interesting thing for producers, because for several years in a row, looking at your crop insurance situation, you couldn't necessarily guarantee really even a break-even year for a lot of producers, whereas this year you might be able to guarantee net income again, which would certainly be something that we had for several years in a row from like 07 to 13, but we haven't had it for quite some time. It would sure be nice to see. So a producer, they listen to me and probably saying, what, he's way too bullish, I don't want to sell anything. Well, no, that's not what I'm saying. What I'm saying is there is potential here, but at the same time, latching on to some of this right now makes a ton of sense, because we haven't been able to latch on to prices like this at this time of year for several years now.
Yeah. Looking at the wheat side, we've alluded to it a little bit, obviously here, Matt. But I know the Russian news with the possible tax there. We're watching that playing into the market. The dollar, you mentioned that's continuing lower, but it almost seems like we might need another round lower to really boost some U.S. business here. We were up a little bit today off the session highs in all three wheat complexes, it looked like. But just looking at this wheat market as a whole, what are some of your thoughts there for our wheat growers in the U.S.?
Well, I think that as far as wheat's concerned, last week's report, both for world and U.S., you dropped stocks. There's some folks feeling like this 850 carryout on wheat could end up being 750. I mean, I'm hearing a lot of whispers of some pretty tight numbers, and people say, "Well, geez, that's not that tight." But you know what? We've been running carries on both U.S. and world 50% on stocks to use ratio. You get that down 10%, 15% below that, and that starts to be a little closer to the situation that you see, for instance, sometimes with corn. And so obviously we're well below that this year, but, there's been times that we've been fairly close to that, 30, 35% level. So I think on the wheat market, it's a tighter situation what we've had before. We know we're not going to run out, but it's certainly a tighter situation. And I think whenever you see this dollar continuing to drop and you see sort of an inflationary feel to this marketplace, a rising tide is going to lift all boats. And I think that this wheat market, will join the party if you continue to run corn and beans higher. I think the what I'm looking for right now is their front month soybean future is going to break $12 and take off and go higher. If they do, you got to think this wheat market is not going to do anything other than maybe gain some value. And I don't know that it's going to go wildly higher. I just don't think that you're going to be able to take the wheat market lower if you take beans at 13, 14 bucks.
Matt, let's switch over to livestock. I'm going to talk about this cattle market right now. Live cattle still kind of just staying range bound. We were down today. Feeder cattle's been good. Kind of watching to see if we can take this market higher. Obviously, we've talked about this before with COVID impacting things here around the world. We're getting vaccines in. We're waiting to see, if we can get a little bit of a pop in the retail market. But I know feedlot country, very quiet to start this week. And it just seems like, asking prices, bids, the last few weeks have just been pretty much non-existent. There really hasn't been a lot of trade out there. What are your thoughts on this cattle market right now as we head towards the end of the year and get into next year? Is there anything to get excited about, or are we going to stay range bound?
I feel like we're going to stay range bound in these front months. I think whenever I look on farther out, I've still got to have some enthusiasm when I get into late spring, early summer timeframe, as we have waded through these big numbers on cattle. As we've waded through big numbers, I mean, your demand's still been pretty strong. And so what's the demand going to look like when you get into grilling season as your numbers have backed off as far as what we're doing for placements right now? And so I think that's part of the reason that feeders have been strong is people are kind of betting on the come, if you will, and that's the way cattle producers been for since the beginning of time. Is we're going to kind of bet that this thing's going to come around and come to us, and I've got to think those deferred contracts on cattle. Whenever you get out to, for instance, I don't know, June, August, in that 112 to 113 range, I think that those price levels could probably see some appreciation on down the road. I just don't see a whole lot happening in your front months right now without some news that we don't currently know about.
Yeah, and I think that's something we'll just have to see what happens there. But I know cattle producers are just kind of playing this range bound game right now, and it looks like that might be the case moving forward. Now I want to flip over to hogs here, Matt. We have seen some good. It looks like maybe some technical support in this hog market with December options expiring, moving to that February contract. That contract really kind of taking the spotlight here, put some premium back into this market. What are your thoughts with hogs right now?
Well, to be honest with you, I have a hard time getting too friendly hogs. I mean, if you could see China come in here buying a ton of hogs, importing U.S. pork, it would sure make a difference. I don't know that they're going to see that, especially with their rapid expansion of their own hog production. And so, I've got to think a lot on farther down the road. There's got to be a little bit of wariness, I think, for the hog producer, especially for your independent hog producers. I'm a little bit concerned about what price levels might look like. In fact, whenever I get farther on out to deferred contracts, for instance, like out into the August, $80 hogs to me seems awful rich. If I was a hog producer and I wanted to find value somewhere and something I could, maybe latch onto, if I was going to have anything terminal in that time frame, I don't know why I wouldn't be hedging some of that. I just have a really hard time believing that's going to be a bad sale.
Yeah, and I think overall with cattle and hogs, we've obviously been watching COVID. That's kind of been a big damper on this livestock market, especially retail values. I think about I just went to the grocery store the other day, and I mean, pound of ground beef at the store, $5-6. I mean, for 93.7. I mean, just looking at prices, retail values, and everything else, I think if we could possibly get some vaccines going and however all of that plays out with COVID, I think that could, maybe be something that jumpstarts this livestock market. But I think that's probably a ways off right now.
Yeah, I think that's possible. I know I've talked to you before. Part of the reason I think that your beef demand, if you will, for me, it's been because people, if they're at home, are still wanting to eat meat. It may
Yeah.
be more meat than what they were wanting to eat before. And like I said before, I mean, you can eat quite a few T-bone steaks at home for what you could pay for one in downtown Nashville, for instance. And so,
Yes.
now if you and I could go out, and have a good time in downtown Nashville, we're going to go do that. And it's going to be a lot of fun. But if we have to stay home, why not cook T-bones tonight and cook them tomorrow night too? I mean, that's what I would do if I could, And so you can afford to do that. We just can't afford to go out every night.
Exactly, exactly. Matt, any other final thoughts on this market today after what we've seen here on Tuesday? Anything else we haven't touched on, or anything you want to reiterate today?
Well, typically when you get in late in the year, you have lower volume trade. Don't be surprised if you don't see some moves in these markets that make you raise your eyebrows. I want to stay balanced. I don't want to get in the middle of in front of a freight train. And so I guess my thing for producers is don't try to get cute with markets right now, because you could see some extreme volatility moving forward. There's a whole lot of things that can happen due to South American weather, geopolitical issues. You just never know. And so just be really cautious about what you would call risk management. Make sure it's managing risk, not
Mhm.
increasing it.
Matt, if producers want to reach out to you and the team at agmarket.net to get a little help with their marketing and all of that, all the stuff you guys offer, what's the best way to do that?
Yep, just head over to agmarket.net on the web. We've got a lot of good research and tools on there. Some real pretty cool technology that we've got on the website as well. Plus all of our contact info. So that's kind of a one-stop shop there.
Agmarket.net, that's the place to go check out. Matt Bennett, appreciate the time as always. Thanks for being on Market Talk.
Yeah, absolutely. Thanks for having me.
Matt Bennett, our guest today here on Market Talk for this Tuesday, December 15th. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.